Hey traders, Akil Stokes here. Welcome back to another episode of the Trading Blog. In today's video, we're going to take a look back inside today's live room session and really show you how we work with traders on taking their thoughts and turning them into tradable opportunities. In the video, you'll also see me mention the DSR level, Dynamic Support and Resistance Indicator. If you're interested in that, there's a link in the description box below. And of course, if you're interested in a free 1-week trial in my live room or Jason Greystone's London live room, make sure you sign up and spend some time with what I believe to be the greatest community of traders out there. So I hope you guys enjoyed today's footage, and I will see you next time. Right? So I guess first and foremost, can you guys all see the six touches here? Just to make sure. All right. So here's what we want to do. Let's take the idea. Let's take the original statement you had, and now who wants to turn it into something tradable? Anybody? Anybody want to turn this into something tradable? All right, let's do it. Do it. Right? So the original statement was this. Akil, would I be right to say that the euro dollar may, again, I'm deleting the will, may drop further down if support is broken? I see bearish divergence on the MACD. All right, so that's going to be our identification part. Identify and predict. So we're predicting that, all right, if price action is broken, right, if support is broken, this is that if-then syntax, if support is broken, then price action is likely to continue bearish. Make sense? If support is broken, and we know that means broken and closed below, so violated. We know what it means, but I guess you want to be specific. If support is broken and closed below, then we're more likely to continue bearish than bullish. If we're going to continue bearish, then where are we likely to go next? And we just drew out that zone on the higher time frame, right? We could do it again here on the 4-hour. Let's say we're likely to come down to our DSR level, which is 111.25. All right. So already in our mind, we have two things identified. We have an idea of which way we want to be involved in the market, bearish, and we have an idea of where we think price is likely to go. So a projection. Does that make sense, everyone? All right, this is how, again, this is the IPDE process. We're eliminating all the noise we see on the chart and kind of focusing on, I like to say focus on your focus. All right, so we've made a prediction of what we think the market's most likely to do next. We've made a prediction of where we think the market's most likely to go next. The next question is what? Remember, there's two parts of the prediction. It's where's the market likely to go and ... Boom. There we go, Chad. How are we likely to get there? He beat you, Kev. He beat you. How are we likely to get there? Now, there are two ways we're likely to get there, right? We can either go straight down, boom, or we can... Oh, he got you again. Look at that. We can retrace. He went for the RT instead of the full word. Oh, man. Well done, Chad. It was funny. I'm picturing you guys. Both of you guys are just at your keyboard, just waiting. And it shows me when you guys are typing, and both of you guys are typing at the same time. It was like, Kev, Chad, Kev, Chad, Kev, Chad. Back and forth, like a NASCAR race, right? They're going back and forth. And then Chad got it. Chad went for the 2 letters. Kev went for the full word. You should have just wrote PB. Peanut butter jelly time. So yeah, we're likely to do, we can either go straight down or we can pull back and continue down there. So now the next question we have to ask ourselves is this. We should probably know this already. What type of trader are we? Are we a counter trend trader or a trend continuation trader? And this isn't a question for you guys. This is a question that you need to ask yourself, or both, I guess, right? If you are a counter trend trader, right, then all you're looking for is this, right? All you're waiting for is, ooh, I can't wait till price action comes to that next level of previous structure support because I'm going to look for my buying opportunity. Right? Does that make sense? That's all a counter trend trader is looking for. When is the market, when is this bearish move going to run out of steam so I can catch a little pullback? Trend continuation traders, they're thinking, how can I get, if I think price action is going to get down to that level, how can I hop on this train? How can I get down there? How can I get on board? And they're saying to themselves, well, if price action pulls back, then I'll look to sell here in advance of riding this thing down to there. Make sense? Do you realize what we've just done, guys? This is trading. Aside from all the hard psychological parts of actually deciding what to do and executing the trade and managing the trade while it's in process and not sabotaging yourself, right? Like Jason Graystone just talked about in this morning's syndicate video. That's the really hard part. Everything Graystone just talked about in the War Room a couple minutes ago, that's the really hard part of trading. This is the easy part. And we took a chart, we looked at it, we made a prediction, we decided, and we drew out two opportunities of how we can get involved or what we should look for based on what type of trader we are. And if you guys are new, you should probably only be one or the other. A few of you guys are more advanced. You can say, well, Akil, I'm a trend continuation and a counter trend trader, so I'm going to sell it up here, try to ride it down, stop and reverse, and catch the next retracement back up. Ooh, you fancy, right? But many of you guys are just, okay, I'm only counter trend. I'm only a structure trader. So I'm only looking to buy down here. I don't care about this. Some of you are only trend continuation traders. I'm only looking to sell here. Afterwards, I'll just wait for the next break. And we've just set up our trading day, right? So now what we need to do is go down to our lower time frame. Again, this is a day trading opportunity. So the 60-minute is our higher time frame for the day trading opportunity. Now let's dig a little bit deeper into the charts, right? Let's go down to a 15er. And let's see what else we have here. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website or also take a look and you'll see more videos available for you. Have a good one.